Okay, today we're going to continue our lecture for this intangible asset. You watch a video and see what we discussed in impairment. Impairment is very simple. Now, before I start this page 25, while waiting for the rest because the number not yet hit 200, 165, the live stream here. Let me see how many in the live stream. 10 only, 175. Let me quickly go back to your lecture note. There's a student asked me a detailed question, which I already tell you that don't go until too detailed. If you got a lecture note, you refer to this page number 11. Page number 11 is on the property plant equipment. I think I highlighted to you that this paragraph 58 is very important. Land and building, they must be separately. In your tutorial last week, you discussed already, land and building must be recorded separately. Clear? Paragraph 58. And depreciation method. Depreciation method, you have this straight line method and reducing balance method. Do you see paragraph 62? The most important thing is it reflects the pattern, how the asset being consumed, and how the asset being expected to be consumed. So straight line method is very straightforward because every year is the same constant amount. This is your straight line method. Constant and decreasing for reducing balance method. Straight line method is a constant charge over the useful life. Okay, if the asset rental value does not change. So the diminishing balance method, decreasing charge. Straight line method tells you that it's a constant charge, diminishing balance, the decreasing charge. So this method reflects the pattern of consumption, how you use it. Some asset earlier year, the first few years depreciate a lot, but later on, not so much. Next, paragraph 63. This one is talking about impairment. In the event there's any impairment, IAS 16, they're not talking about impairment, but you have to refer to MFRS 136. That is your IAS 36. To determine whether or not the property is impaired, is damaged. Impairment is damage. You got it? So when you compare the carrying amount and the recoverable amount, carrying amount is the amount recorded in the statement of financial position. You already recorded. Recoverable amount is two. Either number one, you tell it now how much you can get it. Number two, if you continue to use it for the remaining useful life, how much you can get it. So you choose the higher one. So this one you refer to paragraph, you refer to this IAS 36. Okay, IAS 36. So this is the only thing that I need to highlight to you. You don't study everything. Okay. And you refer to whatever I covered in the tutorial, that is enough already. Okay. So the rest you no need to, like this paragraph 80 onward, no need to study. You just read it's part of your knowledge. You just read it, but just read it, don't memorize. And some students ask me there's a illustration here. Can I have illustration answer or not? Please, this one very straightforward. You just fill out the figures here. Any figure should not be inside. This one should not be inside. Admin and overhead should not be inside. Okay, so the rest all inside. You just copy down it. So in your course exam, I will give you this format. So you just put a NIL. Okay, you just put NIL. You see, this figure all empty. You fill out yourself. Clear? Don't ask for answer. At least the students say, teacher, I already completed this illustration and we take picture. Then let me see. And I never answer also because you already correct. Unless you do something wrong, then I say you wrong already. So today, some student will purposely make a mistake here. Then I will respond you. Please, do it yourself and discuss your friend. Because this question is so straightforward, just copy down it. Copy down all the figures from the top to the bottom here. So except this general overhead and the admin expenses. Testing, yes. Installation, delivery, import duty, insurance, yes. All inside. Yeah. So don't ask for answer. And paragraph this MFIS 136. 136, this is important. I see only the objective here. Only this objective is important. Paragraph number 1. Okay. Only this paragraph number 1 is important. Then you jump to paragraph number 6. Paragraph number 6. Important point is this carrying amount. You to know this is amount recognized. Okay. And also don't forget what's the fair value. What's the impairment loss? What's the recoverable amount? These are the few items which is important. The rest you study before. Okay. So carrying amount is amount recognized. Recognized means recorded. Amount that recorded in your statement of financial position. Anything you need to extend no need to know. Cost of disposal, later you're going to talk about what are them. Depreciable amount you study before in your IAS 16. Depreciation also. Fair value. Remember this is within the market participants. Impairment loss. When carrying amount, it is more than recoverable amount. Okay, impairment loss when carrying amount more than recoverable amount. And recoverable amount, you got two. We choose the higher. We choose a higher figure. Higher of the fair value and also the value in use. So these are the few definitions that is very important that you need to know. Visualize, you should know. And don't forget, this is discussed in the tutorial. This one discussed in the tutorial. Look at here. Paragraph number 12, I mentioned that before. What are the indications of the impairment? This point I want to repeat. Because in the tutorial this week, we discussed this question. The decline is more than expected. Look at here. What is expected? The value of asset going down more than expected. What is expected? What is expected? If you remember, this is an example I give to you. I assume that you got an asset. This is the example that I give you last week. Can you remember? Last 2 weeks. So if I got an asset cost you 600,000, and I know that residual value is 100. This one is all estimate. Look at here. This one is confirmed. The cost is confirmed. The cost is confirmed. But this one is all estimate. 100,000 is estimate. 5 years also estimate. Not accurate one. That means you agak-agak. In 5 years time I can sell for 100,000. So in 5 years, based on this assumption, my total depreciable amount will be 500,000. And if divided by 5 years, according to management concept, depreciation is 100,000 per year. This one here, these are all assumption. That means in your coursework coming this Saturday, you put in your figure by yourself. You got it? You put in your figure by yourself. If I'm not mistaken, I already put in the figure for the first part here. The cost, residual value, depreciation, you calculate yourself. Then come to here, fair value, net selling price, value in use, you have to put in your own figure. I want you to create your own example. I want you to create your own example to show me that you understand what's impairment. So, in the year one, your book value will be 500,000. Now, in the year 2, your book value now is 400,000. It is called expected. It is so-called expected. Remember that just I mentioned that external source of information, they are indication that asset value decline more than expected. Expected means already calculated by you. So this asset 600,000, I assume that at the end of the year 2 it will be 400. But after the year 2, the COVID-19 come in, the factory stop production. Not already stop, slow down the production because the demand lesser already. So in this case, I have to decide my fair value or so-called net selling price. So once I decided, if I want to sell now, can you see that? Your market price dropped to 350. It's more than your expected 400. Understand? The decline very significantly more than expected. Expected is 400. You expected your asset should be from 600 drop to 400, but the decline is dropped until 350. 350. So it dropped additional 50,000 is more significant, very significant, more than expected. That is the meaning. Understand? So this is for this week tutorial. Discuss with the tutor for this point. And then B, adverse, negative, no good one. Okay, this is an adverse environment. Adverse environment, negative factors. Okay, like for example, now online classes, almost 1 year already. How's your feeling? There are some students tell me that, teacher, I feel very happy. I hope that you can continue online teaching, okay, until my graduation. So these are some feeling. But there are some students say, you better don't want. I want to go back to the face-to-face. Because if they say we can have a campus life, so the student prefer. So this is called environment. So adverse environment means that negative. That means no good. You feel no good. Why you feel no good? Because of that technological advancement, technological environment. The new technology to replace the old technology. So in Malaysia, we are talking about 5G. If you read the news in China and US, they are fighting on this 6G. Okay, so that's why this technological advancement very fast. Market, the participants, the buyer and seller. Okay, depends on the market environment. Okay, does the product have a market or not? People want to buy or not? Okay, and you got this product in the market or not? This is called market environment. Economic refer to the demand and supply. You learn economic before, the demand and supply. How many people want to buy this product? How many people sell the product? Determine the equivalent point, the selling price. Okay, or legal. Legal means in terms of government enforcing certain rules and regulation. Okay, so to certain extent, so this may not be able to operate in the future. So it affects the value of the asset may go down. Okay, technological go up, the old technology price will go down. Market interest rate normally determined by bank regulator. So this market interest rate, the base rate, it will affect your discount rate. You learn in the finance paper how to calculate the present value. Okay, net present value. And the last one, carrying amount, is the amount you recorded in the statement of financial position, use of cost minus depreciation. But unfortunately, your depreciation may be understated. Okay, depreciation understated. At the end, you minus accumulated depreciation, you get your carrying amount, which is more than fair value in the market. Okay, internal is your own company. Can you see that damage? But internal, you can control by yourself. External is out of control. COVID-19 is out of control. Inflation is out of control. Deflation out of control. Okay, further, fire is out of control. But this one, internal source of information is within your companies. The item or asset damage already. So what you can reduce the damage, you ask the employee, everybody work very carefully, take care of the asset. Okay, and if the item obsolete already, for example, computer outdated already, you just add in, okay, the memory add in, change Microsoft the new version, it won't become obsolete. You got it? So if this item become obsolete, the value of the asset will go down. Okay. Then this one also adverse environment, but this one is internal. You have a plan. You have a plan to change the use of the asset. Changes of the use of asset. Instead of using 3 shifts, become 2 shifts, become 1 shift. Or slowly become idle. Idle means no use already. Or you may want to stop certain production. Or you want to restructure the operation, change the production A, become production B, and so on. Clear? And the worst thing is the part G, the performance become worse than expected. Your machine always can produce 1,000, and you assume that after 1 year maybe 950, then another year maybe 900. You see machine already sure slow down already. But it looks like from the internal reporting, it becomes worse than expected. So this is very important. This one discussed in the tutorial. And don't forget the paragraph 14 on the cash flow. Internal reporting on the cash flow tells you that A, you spend a lot of money to buy new asset. And not only acquiring, the repair and maintaining also significantly higher than your budgeted. This one is from the statement of cash flow. You can see the cash payment out is a lot to buy asset under investing activity. B, then you got actual net cash flow. Net cash flow from the operating activity also significantly worse. And then C, decline in the profit, operating profit. And D, operating loss. Operating loss. Or you got a lot of net cash outflow. Net cash outflow under investing activity. Clear? So this is only few paragraphs which is important. Of course, paragraph 18 is important. 18 tell you that measuring the recoverable amount, okay, higher of the fair value and the value in use. We choose whichever is higher. Okay, paragraph 28. Paragraph 28 tells you that what are the cost of disposal. You see, you just refer to the few paragraphs I tell you enough already. Paragraph 28, legal cost, stamp duty, these are the costs of disposal. Fair value minus cost of disposal. Value in use is an estimate, not accurate one, of the future cash flow. You need to calculate those time value. You need to calculate the time value. Okay, what's the basis for estimate? You read it yourself. Okay, this one we can skip. Discount rate, discount rate, we are talking about time value and the risk. Time value and the risk. Paragraph 55. Okay. 59. Okay. 59. When recoverable amount is less, be careful. When carrying amount more than recoverable amount, there's impairment loss. Or you reverse the sentence. If recoverable amount is lesser than carrying amount, so carrying amount shall reduce to the recoverable amount. This is called impairment loss. Recognize immediately in the profit or loss. Okay. So we shall start intangible asset now. I just to see 20 minutes already. Yes, I got more than 200 here already. I got more than 200. We can start now. You see, you asked me to record. Yes, I can record. Thank you. Okay, now. Listen here, I got 2 video clip here. One is a 3 minutes video, this one mind mapping. Some of you learned mind mapping before. You watch this 3 minutes video. And there's another longer video, 11 minutes. So just feel free, when you watch this video, at the side you can see a lot of relevant video you can watch also whenever you are free. So it just depends on whatever I posted here. These are the basic. Clear? While you are watching this video 3 times, you try to jot down some notes on that. In the first lecture, I jot down for you, but I feel that I should not prepare everything for you all every time. until today, when the student asks me, can you give us the answer for the solution? You have to work out yourself. Now, today we are going to see this intangible asset. So this intangible asset also asset. Intangible asset also asset. But the most important thing, as I say, is the criteria. You to make sure that the criteria is being met. You meet the criteria. We have to recognize the intangible asset only if the criteria are met. Criteria 1, 2, 3, 4, 5. Later on, we're going to talk about paragraph 57. Yeah? Now, asset, this one you can read yourself, this one not important. Okay, the rest you can read yourself, not important. Then we go to this definition paragraph. Definition paragraph, of course, is very important. This one exactly is your depreciation. This is exactly your depreciation systematic allocation. Means we apply a specific formula. Use your depreciable amount, divide by useful life. Divide by useful life. You spread over the useful life. Depreciable amount over useful life. You at the back here, you jot down here, this is in line with your matching concept. Matching concept. You are applying your matching principle. Asset is a resource control. Remember the keyword, and then you expect benefit. You expect benefit. Asset is a resource control by the entity. Same thing also this intangible asset. Goodwill. Goodwill or patent. Remember the patent, the process, manufacturing process, you have to control. Okay, you have to sole control. Same thing also, carrying amount is important, cost is important. These are definition paragraph. Okay, carrying amount is the amount recorded. Recognize means recorded. Recognize means recorded in the statement of financial position after deducting accumulated amortization and impairment loss. This is the amount recognized in the statement of financial position. Cost is a cash pay. Cash pay to acquire an asset. Enough already. Okay? So in diploma, you just need to know cash pay to acquire an asset. Full stop. And most study is only acquisition, or sometimes we can have a construction. Remember the Bangsa one? Depreciable amount, of course, is the same thing. Okay, less residual value. The fair value, of course, important. I mentioned that last week. Impairment loss. And intangible asset, residual value obtained from the disposal. This is amount obtained from the disposal. Useful life, you measure the period, or sometimes it will be a number of the production. Okay, last week I already started what is the intangible asset. It must be the first criteria identifiable. It must be identifiable. How to define this word identifiable? I remember the example I given to you is I bought a computer, 2,000 ringgit. 2,000 ringgit computer, one whole set. With the CPU, with the monitor, with the keyboard, everything, 2,000 ringgit. But beside the 2,000 ringgit, I need to pay about 300 something, say 400 to acquire the Microsoft, the license. So I cannot see it's inside the CPU. So this is called intangible, without physical substance, but can be identified, can be traced. You know what are the things that you are paying for. That's called identifiable. Okay, in partnership, the goodwill, they based on 5 years profit. The other department say cannot based on 3 years profit. The other department say no, 5 years profit you must average out times 5. You got it? So this is all the uncertainty. So but intangible asset in order to be recognized, in order to be recorded, it be identifiable, measurable, can be measured. This is called intangible asset. And last week I think I started already. We are talking about this research. Research is an investigation. Investigation means it's a study on a certain issue, a study on certain topics. Okay? So what are the topics we study? On the scientific knowledge. Okay? On scientific knowledge, I want to study the bacteria. At the end of the shop lot, okay? You know, in this restaurant, behind the restaurant, sorry, I have to tell you that if you go to restaurant, if you go to the kitchen, I think next time you won't eat in the restaurant. I don't know, sometimes restaurants they are not hygiene enough. You look at the kitchen. But not all, not all. Happened that I went into one of the restaurants, don't mention name, and if I go to the kitchen there, you don't feel like going to the restaurant anymore. So that's why restaurant is very important to take care of your kitchen. If your kitchen is clean, hygiene, the food is hygiene, then customer will come in. So investigation means the study of the issue behind the kitchen. All these food waste, they throw into the longkang, and the longkang stuck already. Okay, the drainage system stuck. So it may create some kind of bacteria. So investigation means the study. Does this bacteria very harmful to human bodies or not? That's called scientific. Research also a study of the technical knowledge. Why this computer, when I download things, is so slow? Then I found out that the RAM may be too small. Okay, the speed. Okay, and also when you open too many windows, so it may slow down the process. So what you can do is you add in the RAM and so on like that. So technical knowledge. Okay, and also understanding. A study of how to make the student more attractive in the online classes. So some lecturers, they are very good, they put a lot of animation, but looking at all wording on it. So that's why we have to study how actually to make student interesting. So I don't know how to do all this sort of animation, but the other way is I found the other alternative. So I download from the YouTube. Sorry, it's not download. So I copy the link from the YouTube and then ask you to refer to that. So if you think that is useful, you let me know. So if still not useful, then I have to change the strategy. That is called investigation, research. I'm finding the best way to make you get a better understanding of the lecture on the topic that you're going to study. This is called research. So whatever money spent on the research activity like Proton, Perodua, they're doing research to find out the customer, what is the customer preference. So when Proton come up with a car, so Perodua also doing research. Proton come out all the sedan car. Okay, so Perodua think about a lot of people, number one, cannot afford to buy big car. Number two, a lot of people not there to drive big car. So that's why they found out that understanding that why don't you come up with a very small car? If you can remember, so many years ago, Perodua come up with the Kanchio. That is in the year 1995. That time you haven't born yet. Okay, I bought my first Perodua Kanchio. It's a 4-gear one, manual. Okay, that time it's only about 24,000 manual, used until now. Okay, so Perodua do a research. They found out that there are people who like this small car, economical car, cheaper consumption and so on. Okay, besides the safety, okay, because the car without any so-called accessory, okay, to protect yourself. This is called research. And last week also I mentioned that these expenses, it doesn't produce any, it's only a study. There's no product, cannot be measurable, no measurable product, so write off an expenses. How about development cost? Development cost is application, menggunakan, application of the research finding. Application of the research finding. Finding means result. Finding means result. The result come out from the study. You already got the result already. You apply it. And come up with the new product. Or if there's no new product, improve material, improve the product. Clear? So this is called development stage. So before, the keyword is any expenses incurred before the commercial production. So you may do research successful already. Now you are in the process of developing. You use your knowledge come out from the studies, you want to prepare, okay, design a new product or a substantially improved product or devices, handphone. Okay, so these expenses incurred before the product actually launched to the market. Before, the keyword is before it launched to the market. This entity-specific value you cover in the degree level because you're talking about present value or cash flow aspect from the continuing using of the asset and from the disposal. This one actually is your value in use. Okay. Next. The very important criteria is, there are three criteria I mentioned that this intangible asset in your diploma level, I think these are only two that I covered in your tutorial. It's either the software and the patents. Of course, including license, intellectual property, market knowledge, and trademark. This one you study in the degree level. Clear? The first very important criteria for this intangible asset. Number one is identifiability. Identifiability can be identified. Number two, you must be able to control. You write that number two. Intangible asset, number one is identifiability. Number two is control. Number three is economic benefit. Economic benefit, number three. So identifiable must be separable. Remember that. Control, you must be able to obtain a benefit. Not only obtain, you must be able to restrict, stop other people from using it. Stop other people from using it. So control means you got the power to obtain the benefit. And not only got the power to obtain it, you restrict other people, restrict the access. Your smartphone got a password. Other people without a password cannot use your smartphone. Clear? How you obtain the power? Normally stem from the legal right. So, however, be careful with this word. However, sometimes in certain circumstances, legal enforcement not necessary. Sometimes it's not necessary. I just want to quote you example for the leasing. In the leasing or hire purchases, you never own the asset, but you have a control. You have a control, and that will be classified as an asset. So this one in the degree level you study that. Market and technical knowledge may give rise to future economic benefit. Any entity control those benefits. Okay, knowledge is protected by legal rights such as the copyright. Can you see that? This is called copyright. Okay, an author who writing the book, okay, to stop from any other bodies using it, okay, illegally, including your Microsoft. You pay money for that, but a lot of you use a pirated copy. You just copy and they're free of charge. And last week, I think I mentioned this paragraph 15 also. You got a team of skilled staff, is considered also your asset. A lot of companies saying that human capital, now they never use the word human resource. They found that human is the capital of the companies. However, there's an insufficient control. If the staff not happy with your company, they can resign and join the other company. Not only resign, join the other company, they pull out a team of the skilled staff, okay, going out. So there's an insufficient control. Okay. So insufficient control to meet the definition of the intangible asset. Unless it's protected. How to protect it? So this is a skilled technician, the technical talent. So sometimes companies send you to Italy, to Japan, to US to have a certain training. And then when you go there, before you go there, you must sign a contract. After coming back from OC, you must serve the company for another 5 years or 10 years, something like that. So it's protected. But even though you sign the contract at the end, if some other company willing to pay you out, they help you to pay the compensation, you still lost control. You still lost your control. Okay. Portfolio of customer or market shares. Okay, this is regarding your customer list and so on. Also your intangible asset. Future economic benefit. Revenue from the sales product. Remember, in one of the tutorial, we are talking about the cost saving. Cost saving. Okay. Recognition of this intangible asset. Remember, recognition of this intangible asset. Very importantly, you must know that it meets the definition. First thing, meet the definition. In this tutorial, remember one of the question talking about medicine. This item is identifiable. The name of the product called Erisol. The name of the product called Erisol. It meets the definition. And also the recognition criteria. Okay, recognition criteria. What does it mean by recognition criteria? Future economic benefit. 31. Can you see the keyword? Future economic benefit. You must have the future economic benefit. And you must be able to measure reliability. Able to measure. Not only measure, but measure reliability. Entity shall assess the property of the expected future economic benefit using the reasonable and supportable assumption. Means what? I must assume the going concern carry on. Paragraph 22. Paragraph 22. One of the assumption used is going concern. My business will be carry on for a foreseeable future period of time. So that's why I will pay for the asset and it will be used for another 3 to 5 years or 8 years. Okay? And entity uses a judgment to assess the degree of certainty. You are quite sure, 90% sure. Okay, this cash flow coming in, but nobody can be 100% sure. I bought an asset, I assume they can last for 10 years. Based on the current environment, I assume the asset can last for 10 years. After 3 years, after 8 years, maybe fire, maybe flood, you spoil your machine. So this one is too long time in the future. Based on evidence available now, at the time of the recognition. Okay, so you ask the expert to calculate the degree of certainty, the risk factor. Okay, the risk factor that you need to base on. So intangible asset always initially record at cost. So paragraph 21, 22, 23, 24 very important. So from 21 to 24, can you please shut down? 21 to 24 is very important. 25, 26 you can read it, just leave it. 27. Do you see this one is similar with your IAS number 16? Paragraph number 16, 17. This one something like paragraph number 16. You use a pencil jot down IAS 16 paragraph 16. To determine the cost of the purchase price including import duty, directly attributable cost. And paragraph number 17, this one is paragraph 28. Directly attributable cost will be an employee benefit. Can you see the same? Professional fees, testing. You got it? Same, And 29 is something like your paragraph 19, not part of the cost. Introducing the new product, new business, new location, administration and other general overhead. It should not be formed part of the cost. Remember, 27, 28, 29, 30 very important. Is same like your IAS 16. So I skip this one because it's the same. Recognition when asset in the condition necessary for it to be capable of operating. So when I going to recognize the carrying amount of the intangible asset, as long as you recognize, it's going to use it already. If the intangible asset cease means stop. When asset is in the condition for necessary use, you add all the cost. Employee benefit, you add the purchase price, import duty, you add everything. And until the day this machine start operating already. Start operating, then you stop. Cease means stop recognition. Stop recognition. when you start using the machine. Okay, cost incurred in using or redeploying the intangible asset are not included in the carrying amount. So not included. What are the one not included? Your repair and maintenance. While asset capable of operating intended by machine to brought into use, initial operating loss and so on. This one not included. So the following is not included. Okay, next. 32, 33, you can leave it. 34, you can leave it. 35, 36, 37, leave it. 41, 42, 43, leave it. 44, 45, leave it. You can read it, so I don't want. Okay, paragraph 48. 48. Internally generated goodwill shall not be recognized as an asset. You use the pencil jot down behind. Why shall not be recognized? Because not measured reliable. Remember, recognition must be measured reliably. Internally generated goodwill you create yourself one cannot be measured reliably. Ukurannya tidak wajar. Okay, cannot be measured. You see, standard never say anything one, so you have to be careful. And prudent concept also say you should not overstate your asset. Do not understate your liability. Internal generated goodwill is not an identifiable resources. Cannot be measured reliably. Clear? So 48, 49 very important. Jot down already. 50. 51. In order to assess whether this internally generated intangible asset qualified, we have the problem in identifiable this asset. And you have the problem to calculate, are you sure that you will generate future economic benefit? Okay, so internally generated cannot be distinguished from the cost of maintaining. Sometimes it's a repair expenses, it's not intangible. Okay, now. So we got two classification of the internally generated asset, intangible asset. So we got research and development. So refer to the definition paragraph. Remember, research is a study, it's an investigation. Development will be the application. Make use of the result come up from research activities. Yeah. So there's no intangible asset shall be recognized. No intangible asset shall be recognized or shall be recorded for the research. Because research, there's no identifiable product. You recognize an expenses when it is incurred. Expenses means recorded in SPL. So the company cannot demonstrate, can you see that? The company cannot demonstrate whether there's any future economic benefit. So it recognizes expenses when it is incurred. This is the reason. This is the reason. Example of the research activity, obtain new knowledge. You want to obtain new knowledge. Final selection of the knowledge. You are searching for alternative. Searching for alternative. You are doing the formulation, design, and so on. These are all studies. No product, no future economic benefit. So these are research activities. But development, this one is very important. I want you to go to paragraph 59 first. Development will be the actual work on already. The design, construction, and testing. Okay? Design of the tools, jig molds. Okay? Operation and pilot. Choosing, testing of the chosen alternative. This one is called development activity. It's a higher level, advanced level than your research. That means from the result already successful, you find out this item, you have to spend money to develop, to come up with the product. So this development cost, it can be recognized as an intangible asset. Intangible asset shall be recognized if, only if, all the following. Number A, before number A, these are all recognition criteria. These are all recognition criteria. This is called recognition criteria. Recognize. Okay. Development shall be recognized as an asset if all the criteria. Before A, the first one, it must meet the definition. That is called identifiable. Identifiable. In your tutorial, there's one medicine, the name of the medicine called Elixir. Elixir. I just want to quote this tutorial to highlight to you. If you can remember this week, I hope that you prepare your tutorial. Don't wait for the answer from the tutor. If you refer to tutorial 4, question 4, this is a very good question. So, question 4, you develop a product, the name of product called Elixir. Elixir. So it can be identifiable. It can be identifiable. Number 1. Number 2, technical feasibility can be demonstrated. You found that this medicine can cure all ills. All ills. In this tutorial, you found that this product can cure all ills. Last time you got headache, you take Panadol. You got running nose, you take vitamin C. You got cough, you drink the cough syrup. So now with this medicine called Elixir, it can cure all ills, scaly-goose, all in one. So that's called technical facilities. Technical facility. In terms of the technical level, the medicine is better, improved compared to the last time. And B, you got intention to produce the product and you want to sell it or use it. You got intention to complete it and the product is on sale. Do you see that? Criteria number 2 met already. Number 1 is all use. A is all you. Number 2 is you got intention to complete and on sales. And C, you got ability to sell it. Are you able to sell? There's a good market. There's a good market. Do you see that? If you got a tutorial question, this is A, this is B, this is C. Good market. Good market, C. And then, good market, Then D. D, you must have future economic benefit. D, you must have future economic. So, certainly, you economic benefit. You fulfill all, And don't forget, F is measure reliably. F is measure reliably. So this one, 500,000 can be measured reliably. If you have this tutorial question, can you see that you fulfill A, B, C, D, and F. A, B, C, D, and F. Category E. Category E. The funding, you cannot get it. Category the E. Adequate resources. This company still cannot get the approval from the bank for the loan. So you make sure that you fulfill all the criteria. Then this one can be recognized as intangible asset. Clear? I hope that this can help you to answer this week tutorial. So yesterday Monday group, you lose out because our lecture is slightly slower here. In fact, last week I asked you to study on your own to prepare your tutorial. So they are good and bad also. Those on the Monday tutorial group, it's good that you try your own first. Okay, example, you can read it yourself already. Internally generated goodwill cannot be recognized as an intangible asset. Paragraph 63. Cost of internally generated goodwill. Remember, cost of material, services, employee benefit, and so on. These are not component. These are not the component of the cost. Okay, this example is very important. Last week I mentioned that it helps you to answer your question 5. This week tutorial. Entity is developing a new production process. Expenditure incurred was 1,000 ringgit Malaysia. CU is a currency unit. At the end of the note here is a currency unit. Different country use a different currency. In Malaysia, use a ringgit Malaysia. So I forget about this CU lah. So you spend 1,000. This is the amount you spend. 900 is before meet the criteria. So this one before it meet the criteria, so it will recognize an expenses. On the 1st December, it meet the criteria. All the criteria just I mentioned A, B, C, D, E, F. From the 1st December, it meet the criteria. The recoverable amount is 500. The recoverable amount is 500. So what does it make it significant? You spend 1,000, 900 before 1st December will be expenses. 900 before will be expenses. 100 after will be all asset. Because 100 is less than 500. Okay, answer is here. In your tutorial, you can follow this one, change the figure only. So, can you see that? Intangible asset will be the 100 because the criteria met. Intangible will be 100 because the criteria met. It met the criteria. So the first 900 incurred before first. This one because it's incurred before 1st December, recognize expenses because the criteria not yet met. So the 900 is not the cost. It's not the cost. Clear? So this is 2015. Now come to 2016. So remember your recoverable amount is 500. So you can recognize the all 100. You can recognize the 100. Now come to the year 2016. You spend another 2,000 ringgit Malaysia. Remember just how we already recognized 100? We had recognized 100. So add up together will be 2001. 2001. But your recoverable amount is only 1,009. Your recoverable amount is only 1,009. Can you recognize the 2,100? So the cost will be 2,100. But recoverable amount is 1,009. You are comparing these two. Do you see that? This is what you compare. and 2001. So carrying amount more than recoverable amount. Can you see that? So impairment loss of 200. So to the recoverable amount, adjust the carrying amount to its recoverable amount. So you recognize. So the last paragraph you can forget about it. This one you cover in the degree level. You reverse in a subsequent period if the requirement for reversal are met. So this one not covered in your syllabus. You can just ignore this part. So this part you can just ignore. Clear? Recognition expenses. Intangible assets shall be recognized as expenses when it is incurred unless in the form of other asset. This one you can leave it. So this one we are talking about amortization. Amortization. When you receive the services, is including the amortization. So remember the keyword, research is recognized as expenses. This one startup cost expenses, training activity expenses, advertising and promotional expenses, and so on. Past expenses should not be recognized as asset. What is the past expenses? Refer to the example just now. Refer to the example just now. You got the past expenses. The 100, the 900 is called past expenses. 900 spent in the 2015, recognized expenses. It cannot be in the cost in the future. It is called past expenses. It's already recognized expenses, that's it. No more already. Cannot come back. Past expenses cannot be recognized. Initially recognized as expenses cannot be asset in the later date. This is the keyword. Originally the 900, you can use your pencil just down there. According to the example there is 900 expenses. You spend 1,000, but you recognize 100 only. 900 expenses shall not be the cost in the future, even though recognition criteria met. Yeah? Now, again, same thing like your IAS 16. Measurement after the recognition. You can choose the cost model. After the recognition, you can choose the cost model and the fair value model. Do you see that it's the same? It's the same. Cost minus accumulated amortization. Fair value also minus accumulated amortization. Same, huh? In your IAS 16, it's the same. Okay, now, the next one is paragraph 85 and 86. Do you see these two paragraphs very familiar? It's exactly same like your paragraph 39 and paragraph 40. Look at these two paragraphs. 3 paragraphs actually. Paragraph 85, 86, 87. When there's an increase, we credit to revaluation itself. Who tells you? Realization concept say the gain not earned, not realized. When there's a decrease, recognized in P&L because of the prudence concept. However, the increase shall be credit to SPL. Use a pencil jot down. Shall be credit in SPL as income. The standard not clear. You must write. However, the increase shall be recognized in the credit side of SPL as income. To reverse a revaluation decrease of the same asset previously recognized in debit side of the SPL as an expenses. Are you clear now? This Saturday, I want you to write like that. However, the increase shall be recognized in the credit side of SPL as income. To reverse previously recognized in the debit of the SPL as an expenses. Can you catch up? It's the same. So decrease according to prudence should be P&L. However, you can reduce any revaluation surplus in the past if there is any. This revaluation itself will be transferred directly to retained earning when your asset is disposal. And this week tutorial, you found that it can be realized as an asset as used. How to calculate? Same thing also, the difference between the amortization. It can be realized as the asset is used. You calculate the difference between amortization based on carrying amount and the amortization based on the historical cost. This is something like your paragraph 39, 40, 41 in the IAS number 16. Exactly the same, am I right? Useful life, determine the useful life. Remember, it's the same also, paragraph 58, the usage, the product life cycle, other information on the useful life, technical, technological, commercial, other type of obsolescence, obsolete. This is talking about useful life. The stability of the industry, change in market demand or for the product or service of the asset. The stability of the industry. Is it shaking or not? Like for example, tourist industry now is shaking because nobody go for tourist, and restaurant also, high-end restaurant, hotel. Competitors. Okay, maintenance expenditure. Legal or other limits. Certain control by government. Whether is it dependent? Sometimes the certain asset depends on the other asset to survive. Okay, the rest you can read it yourself. Okay, amortization. Remember that it's the same like depreciation. I don't want to go through that. It is same like a depreciation, amortization, depreciation method. It's the same. What is the residual value? Review. Okay, at least at the end of each financial year end. $104. Okay, so you take a very short break. I will go through the illustration before I go through the last hour. We are going to talk about the inventories. You take a short break. Before I start inventory, I will go through your realization again. I hope that most of the students here, then I can discuss a little bit about your coursework. Okay, you take a very short 5 minutes break. I got 223 here already, 19, 242. So don't run away, 242. Tell your friend what is the coursework in this Saturday. Okay, take a short break. on the inventory. There are still students asked about this relaxation. Remember, in the coursework exam, I say focus on your tutorial 1, question 9, 10, 11. You got it? In the coursework, I mentioned that focus on tutorial 1, question 9, 10, 11, the explain. And then tutorial 2, focus on question 1, 3, 4, 5, and 6. Don't forget the paragraph 6 definition, 15, 16, 17, 19, 22. And then tutorial 3, focus on question 1 and 2. And don't forget to know how to explain the paragraph 33 and 39 and 40 and 41. Clear? Paragraph 39, 40, 41. Do not limit your knowledge just on this only. This is worst come to worst. Student, I never post it to the Google Classroom because the student take it for granted. Teacher, the student take a picture and highlight this one. Can I just study this one enough already? How to answer you this question? If I say yes, that means every week your lecture is not important. All the tutorial is not important. Only focus on this one only. You see, if I don't give you guideline, I don't give you tips, you say you don't know how to study. If I give you like that, student demand, can I just study only on this one only? I ignore the student, sorry. I don't know whether student is here, sorry to tell you that I never reply your message. You don't ask this type of question, When they ask me question, ask technical question, how to calculate this one, my experience here correct or not? I will read. Again, I never reply means you are correct already. I think only got 2 or 3 students, you calculate wrongly, you see wrongly, then only I say, hey, no, this is not the way. So that's why you can discuss among yourself, but don't just limit your knowledge at this level only. And you got it? So that is how I tell you in this coming Saturday test, 100 marks, question 1, question 2, question 3. Question 1 is on your conceptual framework. Question 2 on the property, plant equipment. Question 3, 1 and 2 also 40 marks, 40 marks. But question 3 is only 20 marks because why? You just need to know the few terms on the impairment loss. What's the fair value? What's your value in use? What's the recordable amount? What's impairment loss? What's carrying amount? You know this term definition. And I want you to create your own example. I already mentioned that I want you to create your own example. Then after that, I feel that I worry that you may not know how to create your own sample. If I'm not mistaken, I change the question. I give you the cost, I give you the residual value. These are the 2 items, the useful life. I think I give you 3. I give you the cost, I give you the residual value, I give you the useful life. Then the rest you calculate yourself. That means I give you the cost, I give you the residual value, I give you the years. The rest you calculate yourself. Okay, so at least the first part of answer all constant. Student, you can copy from each other. But second part, I want you to create your own assumption. What's your fair value? What's your value in use? You don't need to go until so detailed. No need to go until so detailed. You just tell me if the fair value is like that, if the value in use like that. So I choose a higher, then I need to calculate impairment loss and so on. But it's your own example. So this will avoid you from copying. So also you can see my example here already. Clear? So that is how the coursework looks like. So I already tells you very detailed how it looks like. And the best thing is the students say, this one got so many examples, should I go through all or not? Yes, you need to go through all. But if I'm not mistaken, I tell you that you focus on this example number 12 and 13. Am I right? If I'm not mistaken, I told you that you focus on this 12 and 18. I just want to recall your memory about this 12 and 18. You pay for 3 months. Okay? You pay for 3 months, May, June, July, August, September, October, November, December, January, to be paid. To be paid. That means bolong bayar lagi. Because you pay each quarter year. So November, December to be paid. That means November, December will be accrued. November for December will be accrued. Understand? Because this amount to be paid January 31st. So 6,000 will be accrued. So how you record this amount? And how about insurance? Insurance you pay for 6 months. March, April, May, June, July, August, September, October, November, December, January, February. So you found that January and February prepaid. Already prepaid. Extra. Pay extra. Okay. So 5,000 will be extra. So I want you to see this journal entry. Look at this journal entry. Journal entry, everybody also can prepare. But what I worry is your explanation. What I worry is your explanation. Do you see that? The first journal entry is expenses paid. You pay 18,000, you pay 30,000. In auditing, this is called true. You pay 18,000, you pay 30,000. You bayar 18,000, you bayar 30,000. So, in auditing, the first one is called true. It is true. It is called true. In order to be fair, you need to add not a pay. In order to be fair, you need to minus whatever you pay extra. Who tells you that? Accrual concept. I repeat, this is a true. The actual payment of the rent 18,000, actual payment of insurance 30,000. This is called true, T-R-U-E, in auditing true and fair, remember that? At the end of the year, accrual concept, you must tell me, accrual concept tells you that any amount not paid, you add. Any amount paid extra, you minus. That is called year-end adjustment. You study in the year 1 diploma, semester 1. You add accrual minus prepayment. So this accrual will appear as a liability. Can you see I put in the orange color? This accrual will appear as a liability. And the prepaid will recognize an asset because on the debit side. So at the end of the year, this is called fair. To be fair, expenses, even though you pay for rent 18, but it should be 24. Insurance you pay 30, it should be 25 only. So this is called recognition. To be fair, these are the expenses incurred. Expenses incurred, recognize. Expenses incurred, recognize. You want to add one more word, you can write expenses incurred. This is expenses incurred, recognize. Expenses incurred, recognize. Clear? Next. Example 13. You only paid 12 and 12. So, to be received on the 30th April. So, you can find that the accrued will be, again, November and December. Accrued. But this time, accrued is an asset. So, I put green color. This one, accrued is an asset, income. So, this one is each quarter year also, you receive 15,000. So, you receive in advance. In advance become liability. Receive in advance will be for January. So, I put orange color because this one become a liability. Receive in advance. So, same thing also, I show you this journal entry. Journal entry, so far no problem. Income received is 12,000. From the interest, from the rent will be 15,000. This is true. It is called true. It is called true. End of the year, you need to add in. You need to add in income. You need to add 12,000. You need to add 4,000. becomes 16. And this one, rent received, you the minus extra payment. Receive extra. Then, at the end of the year, this is called year-end adjustment. So this one will be fair. This one will be fair. The income realized at the end of the year. So you snap the picture on this. I put in different color to let you see the asset and liability. Clear? My coursework, I want you to explain, not only prepare Gen entry. If you can explain, then you are the A student. You cannot explain, you may get less than 80 marks. That's why I say your passing marks 50 lah. But my assumption is my coursework already tells you what the question coming out, and it's only limited to these 3 chapters. So you should anytime get marks more than 80 marks. Means most of y'all, if you already do it, there's a chances you can score 100 marks. In the past, I never give 100 marks one. But since about 3 years, I think 3 years ago, when the student now becomes smarter, we got quite a number of students, I think easily can be up to 10. 10 to me still very little, but it's surprised that more than 10 students can get 100 marks. That means this student really learn. How about the rest? You also can, but you don't want any. The more you practice, then you can earn your 100 marks. Coursework 1, make sure you score the best. Okay. Then the next will be on your property, plant equipment. This is an article from the ACCA, okay, for the paper F7 financial reporting. So they cut down the definition and disclosure. They focus on this. This is solution 1. There's a settlement discount. Have you taken down already? Okay, remember the 73,800 is the net invoice price. In the event there's a early settlement, you already paid in full. So then there's a prepayment. So you already paid 7,000, but expenses 1 year is only 1,004. That means the other 5,006 will be prepaid in the year 1. I repeat, 7,000 is already paid in full. You divide by 5 years, answer should be self-constructed asset or inside. Okay, this one loan. Accession of the overhead. Kecuali interest also should be in. Can you see that? So this one you put an NIL. So the rest all copy only. Are you okay? No need to show answer. So please do something. Do something and then ask. So this one, income statement is an expenses. Income statement is statement of profit or loss. Statement of profit or loss. So general overhead from the question just now, you already get 940,000. Remember that? 940,000 cannot be recognized as an asset, so it will be expense. Sorry, this is RM. Interest for the 3 months, now expenses. Because we recognize 9 months only. This interest, why you recognize 9 months? The loan on 1st April. The loan from the 1st April until 31st December. 9 months. 1st April until 31st December, 9 months. Then the remaining 3 months will be expenses. Take note, this one we only take care of the 9 months. 3 months will be expenses. So for the subsequent expenditures, should only capitalize. Subsequent costs capitalize only if. You remember the keyword benefit, and you must be able to measure. Future economic benefit, and you must be able to measure. Others not meet the criteria will be expenses. For example, the repair and maintenance. For example, repair and maintenance. How about the one benefit and can be measured? I think I mentioned that before. If your car, your van, your lorry, after 10 years, your lorry and your van very old already. You take out the whole engine. You replace another new engine. That is called, you are going to create future economic benefit, and you pay for the engine can be measured reliably. So this engine will be added into the cost. You got it? For example, you got a lorry, you got a van. Say for example, the lorry and the van cost you 50,000. For example, 50,000. Year 1, year 2, year 3, year 4, year 5, you depreciate it until zero already. But you don't throw away. You just change the whole engine. You spend 5,000 to change a new engine and then do the major overhaul of the car. You spend 5,000. This 5,000, it creates future economic benefit. The lorry still can be used, the van still can be used. So this 5,000 can be the cost of the lorry or the van. Okay. Other than that, is a repair. Will be recognized as an expense. So following the example that you have an upgrade package for the plant. So it took a total of 2 days when the new component added. So you'll be lead to the reduction in the production time and able to increase the production without the need to purchase a new machine. Can you see that? Without the need to purchase a new machine. So this item, the earning capacity is already increased. Earning capacity increased so can be capitalized. 18,000 should be capitalized because the earning capacity is already increased. Depreciation is defined as a systematic allocation, the keyword here, systematic allocation, over the useful life. This is in line with the matching concept. Okay, matching the cost. Okay, matching this cost to the period that you can earn income. That is your depreciation. The method I think I discussed before, there's either straight line method or reducing balance method. This week you got one tutorial question, something like the question 5 later on, we'll talk about it. So you got this item cost you 200,000 RM. Reducing balance method, 25%. In the year 1, 25% will be 50. So now become 150. Then in the year 2, question asked for the year 2, you bought in 2018. Now you calculate for 2019 depreciation, 2020 depreciation, 37. So the working is at the bottom here. The first year, 200 minus 50. First year, 200 minus 50. Second year, minus again, 37,500. So your carrying amount now become 112,500. Useful life and the life will be changed. This question last week I discussed already, but I never give you the answer. So students see one answer. Can you see that? You got an asset 120,000, residual value 20. So use a 120 minus 20 divided by 10 years. Divided by 10 years. Can you see that? 100 minus 20 divided by 10 years. You can get your depreciation. So depreciation will be 10,000 per annum. So first year minus 10,000, second year minus 20,000. Depreciation still 10,000 now, but your carrying amount now become 100 after 2 years. 2008 and 2009. The question say 2 years later, the residual value was reassessed. Residual value reassessed. And the life also 5 years. Life 5 years. Change the useful life, change the residual value. It's supposed to be 10 years. Can you see that? Initially it's supposed to be 10 years. Residual value change. Life also change at the end of the 2020. So depreciation need to be recalculated. Now 100 you divide by 15, so you get 17. So your statement of financial position will be now new one, 100 minus 17, 83. Now come to revaluation. The rules is either use the cost model or the revaluation model. Use your carrying amount minus the value of asset. This one discussed in the tutorial before last week. If there's any revaluation gain, and example 7, you purchase a building 100, life 40 years. You divide by 40 years. 2017, 18, 19, 30th March, 31st March. So 2 years depreciation. So life is 40 years. So 2 years depreciation will be 5,000. You minus first. I think last week tutorial, I give you the alternative solution. So the accumulated depreciation, deduct from the asset first. Then only compare with your fair value. This is a fair value. 120. This is a fair value. 120. So you get again 25,000. Listen here, there are two journal entry here. You debit the cost, credit revaluation reserve. Debit accumulated depreciation, credit revaluation reserve. That is answer from the textbook. But last week, if you go through the tutorial, in fact, I debit accumulated depreciation. IAS 16 say you should credit the building first. Credit the building first. That's why that is how you minus the 5. The first journal entry is debit building 20. Sorry. The first journal entry is debit accumulated depreciation, credit building. I repeat, the first journal entry, here got two journal entry. You should debit accumulated depreciation 5,000 and credit building 5,000. So now your building left only 95. The second journal entry, building debit 25, credit revaluation reserve 25. Sekaligus. For those who lost already, your journal entry, it should be like that. You debit accumulated depreciation 5,000 and credit building 5,000. So your building originally got 100, now become 95. So from 95 go up to 120. So now you debit your building 25,000 and credit your revaluation reserve 25,000. Understand? You got two journal entry. You debit accumulated depreciation first to cancel it, to eliminate it. Menghapus kirakan dia. Then credit building to deduct from the building. And then your building now become 95. 95 compared to 120. So it's different by 25 increase. Credit revaluation reserve 25. So you jot down this journal entry. So instead of one journal entry, make it 2. You show in the ledger later on by yourself. Can you see that? The gain is always recognized in equity. What is the reason? Because this is called unrealized gain. Recognized in equity because this is called unrealized gain. next one. Revaluation loss. The revaluation loss, you can charge again any related revaluation surplus last year. Otherwise, charge and expenses immediately. Revaluation loss, you can be charged again any related revaluation surplus. If last year you got, otherwise you'll be expensive the current year. So you got this carrying amount. The question they give you carrying amount is 108. So fair value is 95. Last year you got a balance. Last year you got a balance of 10,000. So use your carrying amount 108 minus 95. Your loss is 13. Just now the gain is 25. Just now the gain is 25. So now the loss is 13. So this 13 I recognize as an expenses, but I can deduct from maximum the original gain. Okay, you can charge against any related revaluation surplus. Then any additional, the balance is a loss. Last year you got a balance of 10, so this will be your balancing figure. This one will be your balancing figure. You see that this balancing figure. SPL lah, this one actually is a SPL. Okay, done. Paragraph 41. Paragraph 41 say you can transfer. IS 16, paragraph 41. You transfer debit revaluation itself, credit retain earning. In the exam, unless the question talking about company's policy, if the question is silent, this transfer is not necessary. IS 16, paragraph 41 permit, membenarkan you transfer. Membenarkan doesn't mean make it compulsory. You just wait until the end of the useful life when you sell the asset. Then only you transfer. I repeat. Paragraph 41 say the revaluation itself will keep until end of the useful life. Then only you transfer to retain earning directly. However, if the question say company's policy is to do the transfer annually, then only you calculate. When question is silent, you don't do anything. Because standard is a guideline, they never say you must do that. The standard say that you can do your revaluation, but you got a choice. You want to keep a historical cost, nobody can force you. Okay. So example number 9, I hope that please work it out yourself. Okay, I leave this one empty. So please work it out yourself. 9. You got this 20 million, bear in mind. 10 million for the land. 10 million for the land. That means there's another 12 million for the building. 12 million for the building. Originally, cost is 10 million. 2 million for the land. Remember, the land and building must be separated. That is 10 years ago. 10 years ago. The original useful life, 40 years unchanged. So company make a policy, to transfer the realized profit. So in order to prepare your last week tutorial, you should be able to do that. So formula given to you, I hope that you can work out yourself. Don't wait for my answer. You show me your answer if you already prepared it. Okay. Last week tutorial, you got 2 questions. Revaluation takes place at the start of the year. Question 6. Question 6. Depreciation should be charged according with the new rules. You小朋友jot down last week tutorial 3, question 6. Question 6. Question 6. How about if revaluation at the end of the year? Your tutorial 3, question 5, end of the year. Your depreciation based on the original cost. Okay. So you got question 5 and question 6 in the tutorial. You revalue the asset. Or okay. So that is how I want to prepare you for your degree level. So whatever you study in the diploma is just basic. On the first day or the last day, in the degree, any day in between. Okay. So company purchased a building on the 1st April 2015. So 16, 17, 18, 19, 20, 5 years later on, you revalue the building 5 years later on. So you divide by 40 years, by 40 years. Yeah, so you calculate yourself how working all given to you. All the working given to you. So remember, you know why 5 years? 2005 to 2020, 5 years. You do your revaluation. Same like just now what you show. You got 2003, you prepare 2003. Example 11, same thing also. 40 years useful life. So working all given to you, you just calculate 2 million divided by 50 years times 6 over 12 because 6 month period. Work it out. I'm not going to show you here because this one I prepare for your degree level 1. Okay. So you work it out. And of course you can show me your answer. You work it out. Recognition means don't want it, don't want record, no longer benefit. Or when you sell it, no more benefit. So you need to calculate gain or loss. When the disposal more than that, you can get your gain. Then otherwise it will be the loss. Example number 12. Very straightforward. Leave it to you. Previously revalue asset, now you can sell, you can have the realization, realize remaining surplus. With your profit, the last profit will be earned back. In your last tutorial, we discussed this one before. Okay, so I think I end for only. Now it's 9:53. So you come back at 10 o'clock. You'll spend about 40 minutes only, maybe half an hour if you're fast for the inventory. because you already cover in your fundamental, in your financial accounting 2. Okay, semester 2 in your year 1 financial accounting 2 in line 3. Okay, take a break now. notes by the student by So materiality concept allows you it should be understood by materiality concept membenarkan. Okay, allow sell all these equipment tools. Also sold by the hardware shop. So it become inventory. So 800 will be the cost of goods sold. End of the year, you use up 12 rim expenses. Yeah. here, you close account. Okay, in the form of material, 把它们打。The services. What does it by suppliers? You check dictionary. Because they need to use the A4 paper to print out the legal document. This you go and see those traditional businessmen, they keep a very big sign. They got engine oil. They are not. You okay? You buy this item now, same quality one. Okay. Sweet talk at the end, you feel that it's no different. Coming out in the market, they're not. Okay, it's mushrooming. That's why in the net realizable value, we are talking about ordinary cost of business. you see? I got it. Okay? These are called market participants. I'm willing to sell, you're willing to buy. Okay? And at the same time, you're willing to sell your Dusun Durian in Pahang. I'm willing to buy because I want to go back to the Dusun Durian. Between the buyer and the seller, occasionally, case by case. Clear? So I hope that now you are clear what is the net realizable value and the fair value. This orderly transaction within the market participants. The willing buyer and the willing seller. Nobody force you one. And the buyer they are related party transaction. Your father sell the land to the son. Amount not equal already. This amount become not equal. Okay, this is called market participants. The net realizable value entry is a finished good. I mentioned just now, finished good, work in progress. It can be materials. This is your first definition just now. Service provider, then it will be the suppliers. Cost of purchase, cost of conversion, and other costs. nearly directly. Okay, nearly directly with the volume. The number it depends on number of unit of production. This one, for example, like your so just use your 500 DI. Gonna produce 100,000. At the end, you may fix overhead. Thousand units. Fixed overhead 5,000, normal capacity 100,000 units. So fixed overhead per unit will be equal to 5 ringgit. Correct? 5 ringgit each. So the next one you are going to confuse already. Why? You must get ready, because it's a fixed overhead will be equal to 5 ringgit times 80,000 unit equal to 400,000. This is a fixed overhead allocated. Allocation. Okay, here. Can you see the point here? Fixed overhead is 500,000. Allocation is 400,000 only. Then what happened to 100,000? Unallocated overhead will be recognized as an expenses. Buddhan concept say, okay, now you look at here. I give you another. Okay, I put it 125. Fixed overhead allocation. Sorry, fixed overhead per unit. Now, your fixed overhead per unit will be equal to 500,000 divided by 125. Now become 4 ringgit. So, in order to calculate your inventory, it will be your direct material, direct labor, and overhead. So, can you see overhead becomes smaller already? Overhead becomes smaller already. Just now 5, now become 4. Overhead becomes smaller, your cost of inventory become lower. That is why your smartphone now become cheaper and cheaper. Clear? A4 paper. You see, this is A4 paper, but customer don't want this one. They see A4 paper, this one's A4 paper, they want to cut the corner here, cut the corner here, like that. That's called design. Okay, any cost. table and chair. The chairs. I cannot come to the shop. I want to buy the furniture. Which one you want? You want table or chair? Interchangeable. So then you apply the first in first out on WAC. These are called interchangeable. Clear? You use the cost formula. Item not interchangeable, you have to read. Weighted average cost formula. You add up together these two figures. That means every time you purchase, you recalculate. You recalculate. In excess. That means do not overstate the extent. So it's a matching. So expenses, you must have the related revenue. Also, I said this is important. Carrying amount of the inventory. Use a pencil jot down by yourself. Number A, the formula is either WAC or first in first out. WAC classification. Cost. This work in progress at cost. Finish. It's about that. Just now 10. We end at 10:50. So, yes, welcome. Continue your happy. Okay, if no question, I'm going to stop. I will stop the live stream first. Still got 4 students there. Any question? If no, if you want, you join the main group. Stop streaming.